And if you want to raise millions, that's how you're going to have to do it. There is no other way to do it. You can't meet with 1,000 people. I don't care, Adam, how big your meetup is, okay? You need something even bigger than the biggest meetup in the world to reach that kind of scale. And the way to do it is by committing to content.
Welcome. You're listening to the Apartment Investing Show. This is where you'll learn how to start or scale your apartment investing career. Your host, Adam Adams, has never used the excuse of his dog eating his homework. Adam and his guests will show you how to create residual income by investing in apartment communities. Now, here's your host, Adam AAA Adams.
Welcome back to the Apartment Investing Show with your friend, Adam A. Adams. And I'm so excited because we got Michael on the show. Michael Blanc, he's actually the reason why I got into syndication in the first place. I had been in multifamily practically my entire life, collecting rent when I was about 9 years old and flipping units with my dad when I was a teenager and owning my own multifamily in college. But then I listened to Michael's podcast and he inspired me to go bigger. He inspired me to raise capital from other people and to be able to close on larger deals. And now I've closed 7 syndications with partners. And I have a great deal of gratitude for you, Michael. So it's really, really exciting to have you on the show. Thank you for coming on.
Well, it's a pleasure to be here, and thank you for the kind words. It's amazing what you've done in a short period of time. And not only have you done deals, but you've become an influencer in your own right, thought leader, and you're teaching other people how to do with this wonderful business syndication. So thank you for what you've been doing.
I really appreciate that. I've shared the stage with you a couple times. You've been on my stage twice, I think. You've been on my podcast, and you've got the Dealmaker Live event is coming up again. Last year, you crushed it. You had a ton of people, and you filled a room, and I was really excited to be there. And oh, you know what's funny? I just realized this. Not funny, but really, actually, it's unfortunate, but somebody that I met at your Dealmaker Live, the godfather of real estate, just recently, we lost him. But I met Robert and Bob Helms at your event. You pull a good crowd, lots of good people.
It is. It's going to be difficult to replicate. We're going to do it virtually, of course, this year. It was kind of painful extracting ourselves from an in-person event, and the reason we do it is to get together in person. So we're going to try to do an attempt to replicate that virtually. We have the same roster of speakers. You're speaking at Dealmaker Live. We do have Robert Helms and Tom Wheelwright. Even got Brandon Turner.
Awesome.
Who was going to come out in person, but now he can do it virtually. So we're going to do it virtually. We have a lot of interesting unique networking opportunities virtually. So we're going to try to do it virtually. I think it's going to be great. It's not going to be nearly as great as in person, and there's nothing we can do about that, but it's going to be daggone close second.
And so that's coming right up. So what we'll do is we'll throw that link in the show notes. Is it just dealmakerliveevent.com?
Dealmakerliveevent.com. That's right.
Perfect. And then I have an affiliate link, so I'll probably throw that in there. We'll get a couple extra people to join us. It's going to be fun. I'm excited. Yeah. Is it 3 or 4 days?
It's about 3 days. I think your link is dealmakerliveevent.com/Adam, I think. So it's pretty easy.
/Adam.
Yeah, and your listeners listening is going to actually get a discount, which my peeps don't. So yours do.
Awesome. Well, thank you for offering that. I really appreciate it. Michael has done so many awesome things. I've been following you, Michael, for a long, long time. I know you've been on my other show as well, the Creative Real Estate Podcast, which you drop some massive value. But let's just dive right into this show because there's a lot of ground to cover. And the first one is I want to go through your story where you were an employee of a software IPO, and then you turned into an entrepreneur. You started your pizza franchise, and now real estate. So I gave you the high level. Tell us a little bit more about your transition into multifamily.
Yeah, I mean, it was pretty rocky. The stuff we kind of teach a blueprint of financial freedom today, which is really direct with multifamily, whether you have money or experience or lack thereof. Mine was totally not like that. I made my first, money with a software IPO, which I feel like I was in the right place at the right time. I didn't really do anything directly to earn it. It's not like I built a business to earn that. It's just, we were just collectively in the early 2000s when we IPO'd. And then I read Rich Dad, Poor Dad, and I was like, oh my gosh, it's not how much money you have in the bank. It's not what your salary is. It's all about passive income. And I had like 0.01% it was like dividends or some stupid thing like that. I was like, I have to fix this. So after significant hemming and hawing, I decided to throw away my entire master's degree and schooling and work experience to pursue this thing called passive income. And I did a bunch of stuff. I traded stocks and options. I learned to flip some houses. I took an apartment building boot camp, believe it or not, early in 2006. But my big idea was restaurants because I was surrounded by restaurant franchisees who were printing money. So I said, ooh, I want to print myself some money. And that's what we did. Yeah, so that was my big idea. So I went all in on the restaurant because of the passive income. That's what was laying around me. Yeah, I had flipped a couple of houses before, which was totally eye-opening, but it wasn't the thing. And it went well. I was in a state of semi-retirement for about 3 years until the recession changed that. And long story short, I subsequently lost my IPO millions in the restaurant debacle. And I was really close to going back, getting a job. And I was like, man, this cannot be. I go all the way out on the ledge, step off the ledge just to crawl back to get a job again. And I decided to go back to real estate because I flipped a couple houses and that worked really well. So that's what I did. I did all my money was deployed. So I started to raise money for people to buy these flips. So we did about 2 houses a month. And it was great, made some good money. So I had this bucket, Adam, right? There was like leaking water on the bottom from the restaurants, and I was shoveling stuff, pouring it back on the top through the house flips. So I was like constantly trying to solve this problem in the restaurants while flipping houses. It was unbelievably stressful, and I was making like no money. And it was really bad. And then I kind of sort of accidentally got into an apartment building through one of my wholesalers. And I was like, oh man, yeah, I remember that. I remember the apartment building. It's pretty cool stuff. And let me do that. So I did that building. It was a complete nightmare. And finally, after it stabilized, it just started sending me mailbox money. And it was kind of boring. Meanwhile, the house flips are really exciting. And after a while, I was like, man, I'm like burning myself out of these house flips. And I was looking at this apartment building. And I was like, man, I got to do more. I got to do more of that and less of this. And that's kind of when I started shifting. And then as I started to, get on my own podcast and write a book, I was interviewing people, and I noticed a pattern where the people could bypass the entire insanity of single house flipping. And then we kind of pushed forward, and we realized that people don't have to do 5 or 10 years of house flipping or landlording, and they can go right into multifamily, which was really eye-opening for me and also for a lot of other people. So now we know, as you know, that you can actually bypass it. You can overcome your lack of capital by raising it. You can overcome your lack of experience by doing some education on yourself, but also building a team around yourself. So it's very simple within a matter of 1, 2, 3 months to overcome these major shortcomings that I thought needed 5 or 10 years of single family house investing. And, as a result, people from the time they got started from multifamily investing can leave their jobs in 1 to 2 years. I always say 3 to 5 years, but honestly, there's only one person I know who's a slow learner who took that long. Everybody else does it in 1 to 2 years. And so it's amazingly direct and powerful and universal. It appeals to so many different people, both on the active investing, and there's different ways you can active invest, and then also on the passive investing. And they all lead to the same path, to the same destination, though the path may be a little different, but the vehicle is always the same, which is multifamily.
Love that. And you brought something up that I host some meetups, and every time people come up to me and they say, I love what you're doing, I'm going to do that. And I asked them this question. I said, awesome. When are you going to get started? And they're like, 3 to 5 years. It may probably 5-ish years. And I'll definitely get started in multifamily. That's where I want to go. And it's the same thing you just kind of went through. I ask, well, why wait 5 years? You could be completely retired. You could leave your job in 5 years. You don't have to do any. And they always say, well, don't I have to do a few single family first? Don't I have to do like a duplex, then a 4, and then an 8, and then a 10, and then maybe a 12, and then a 20, right, before I can get started into the stuff you're doing? And my answer is always, you don't have to do that. You don't have to worry about that. So I'm glad you brought that up. Instead of waiting 5 years, do it now and be retired in, I guess, 1 to 2 to 3 to 5 years, depending on if you're a slow learner or the normal.
But you have to address the elephant in the room, which is, well, okay, great, Adam, Michael, you guys have done it, but how do you really do it, right? Because I don't have any experience. And how do I do it? I don't have any money. How do you do it, right? So we should probably talk about that, because people are like, oh, okay, well, it's easy for you to say.
So how do you do it?
Well, how do you do it? Let's tackle one after another. I mean, if you don't have capital, and here's the thing, even if you do have capital to do your first deal, that's great. It accelerates the process for sure. But then eventually everyone runs out of money, and learning the art of raising capital is extremely powerful. And I didn't get this until I started flipping houses. And there wasn't really a blueprint to raising money. I just kind of went out there, hey, I'll pay you 12% and it's a 6-month term. And people were like, oh, that's pretty good. And I was like, it is? Go, yeah, that's pretty good. And so I started raising capital, and this aha moment, I got this light bulb moment where it's like, my gosh, I can do something without having my own capital. And that's really what entrepreneurs do. We make things happen out of thin air. We create things where there was nothing before. And raising capital is a perfect example of that. And people always think, oh, I don't want to come begging for money. Well, the way I think about it is that you're not really begging for money. You're providing a service to people with money. People with money have different set of problems. Maybe not the same as people watching, listening, or you and I even, but they have problems. One of them is they can't get a reliable, predictable return in the stock market. The volatility is high. The uncertainty is high. That's a major problem. Number two, it's very difficult to get cash flow off the stock market. So it's very difficult to replace your income or your expenses and quit your job. And number three, you pay taxes, capital gains taxes. And so when you come to them with a alternative investment that is higher return, much more consistent in return, provides cash flow and incredible tax incentives, people are gonna want to talk to you. And so I always say, hey, if you don't want to raise money, I don't want to raise money from friends and family. I'm afraid to lose them. Well, you shouldn't raise money in the first place, but you know what? You're doing them a disservice. You're actually selfish for withholding this thing about syndication. And so it puts raising money in a whole new light. So you're actually providing a service for raising money.
Love it. Love it. So who listening should decide and consider that multifamily is a good way to go?
So we're going to split it between passive and actives. If you have real estate on the brain, and many have real estate on their brain, and only a small number are actually multifamily. You see this as evidenced in meetups and real estate association meetings, right? So many people are thinking real estate investing. If you're thinking real estate investing, then this is for you. Because I can tell you from personal experience and secondary experience, you can bypass the single family house stuff right away and get right into multifamily through syndication. So that's who it's for. If you're on the passive side, anyone who has money in the stock market right now needs to be paying attention. And I'm not saying you should fire your financial advisor like right now. I'm saying take some amount of money out, find yourself a strong operator like you guys are, and maybe we'll like that as well, and just test it out. Because what happens, literally without exception, is people who do that go, this is pretty cool, and eventually they fire their financial advisor. So if you're an investor, passive investor, be open to other alternatives outside the stock market. And multifamily is not the only, there's other asset classes. There's also oil. There's precious metals, right? Just opening the whole, box of alternative investments is something any investor really should pay attention to.
I want to ask you a question on just since we're recording during COVID, what do you think is the outlook of multifamily real estate? Is there a bubble on the horizon? What are your thoughts?
Yeah, the bubble's kind of popped a little bit, thankfully, and so that's good. I think the outlook is positive. I think what's changed is some of the underwriting criteria have changed. For example, 2, 3, whatever plus rent growth, probably not in the cards. You have to underwrite certain things where lenders are requiring certain reserves that we didn't have before. So it's just a matter of putting it into your reserves, really. But the outlook, collections so far have been surprisingly strong, and we're pleasantly surprised by that. People are choosing to pay their rent. And I think it's just because there's so much uncertainty with job and maybe health and stress in general. They don't want to mess with their roof over their heads. And so they're choosing to pay the rent, which is great. And, you can't make more affordable housing. So, or it's very difficult to do that. And so the demand for affordable housing was so strong before COVID, there's no reason it's not become any less. However, some of the rent growth projections we had, and certainly maybe even collections, would have to be dialed back. But the outlook long-term is extremely strong. Short-term, a little bumpy. Medium-term, it'll be just fine.
Got it. What do you think if we compare maybe stocks versus multifamily over the next 2 years and over the next 20 years, what are you kind of seeing and what do you feel might be happening?
Well, I can't predict what's going to happen. I can look over, let's say, the last 25 years. And I did this, Adam, because I was curious and I'm a numbers guy. I love spreadsheets. So I said, hey, what was the returns of the S&P 500 over the last 25 years? And guess what? It was 7.4%. This was before recession, during, and after. 7.4% average annual return. And you're like, well, that's weird. Why is it only 7.4%? It's because of the volatility, right? Because when the stock market goes up and your principal goes up and it goes down, the average annual return that's advertised, whatever it is, 10%, is actually not applied to a growing number of principal. It's applied to now a smaller principal. So therefore, if you actually look at the actual average return with volatility, so the actual return, you put $100,000 in 25 years ago, then my average annual return is 7.4%. All right, that's not bad. It's not shabby, but that's before freaking fees. Okay, you got to account for it. And if you're in mutual funds, you can have 1% in fees, sometimes less. And it does not account for taxes. And financial advisors, stockbrokers get paid when they do what? When they buy and sell. So they're going to churn your account nice, and every time they do it, you got to pay taxes. So that's aggravating. And then, last but not least, is inflation. Inflation is someone no one really talks about. We just kind of pay for it, really not knowing. That's the real tax. And the Fed's targeting a 2% inflation rate every single year. They have done this over at least 10 or 15 years, and that's by design. We call it growth, right? So when we actually advertise a 3% GDP growth, is actually only 1% because the 2% is made up by inflation. And the stock market really doesn't accommodate that. And what I love about syndications is it addresses all of those things, okay? Because syndications, there is no volatility. It's an average annual return of whatever, 10, 12, whatever the investment vehicle is, 10 to 15% average annual return. That is literally a compounded return, right? You put in 100,000, 5 years later, you will have doubled your money. It's a compounded return. So that's pretty cool. Number two, you're not paying taxes while you're holding it. And even when you do sell it, when you get your distributions, you're not paying taxes because of depreciation. This power of depreciation on your tax statement. You're putting money in your pocket while your tax statement is showing a loss, and your CPA is like, oh, I'm so sorry you made a loss last year. I'm like, well, no, actually I didn't. I put money in my pocket. So you're not even paying taxes, which is pretty amazing. And you're making cash flow, which is pretty amazing. And so you put all these things together, and inflation. I forgot about inflation, right? So as inflation goes up, well, people's rents goes up. And as people's rent goes up, the income goes up. And with income, the value of the property goes up, right? So it's pegged to inflation. Let inflation come. Let it be 10%. I don't care. Rent goes up at 10%. The value is going to go up times that, whatever the cap rate is of that. And so you put it all together, and you're like, dude, why would you not invest in syndications? And the answer to that really is because I don't know it. And there's a fear factor. So what you're doing and what we're doing is we're continuing to educate our passive investors about and making them more comfortable with investing in syndications so that more people stop investing in Wall Street and start investing more in syndications.
This is all really good stuff. And I know on my next question, I can think of a couple times you touched on it already. I guess I just want to dive a little bit deeper on how the average investor can get started investing in multifamily real estate, even if they have literally no experience or even perhaps no cash in the bank.
Yeah, we talked about the capital raising. I don't know if we have time to go deep into capital raising, but it's a matter of literally sharing your enthusiasm with people about getting into apartments and just sharing with them the things we just talked about. Hey, you're not going to believe it. There's this thing called syndication, and it's got cash flow, average annual return 10 to 50%, and tax benefits. And they're like, really? Is it legal? And so you have a conversation with people, and you're not really, quote, raising money per se. You're educating people, and some people are going to go, I want to know more. And you just kind of go with a flow in that. So raising capital is super surprisingly easy, especially in an environment like this in COVID, where the stock market took a tank and it's going up one day, down the next day, right? And so the conversation goes, hey, how's the stock market treating you? And there's your opener, your elevator pitch. What more do you got to say? So raising money right now is extremely easy. And that leaves the other part, which is, my gosh, I don't have any experience. Why do you think that I can get started with buying a multi-million-dollar apartment building? And it's really a pretty simple blueprint for that. And number one is get your education, right? And you get your education in a variety of different ways. There's books, there's YouTube, there's podcasts like yours. There's a lot of free education out there, which really helps answer the question, hey, is this something I should consider? And if the answer to that is yes, at one point you do have to invest in your education. It's a little bit of a technical thing, kind of like, hey, I want to start, playing golf or sailing. There's a new set of language and some techniques, written and both unwritten things, that you need to learn. And so there are seminars and online courses. We have them. You have them. My advice always is find someone you resonate with, and then just go deep with that person and educate yourself. And it's not a complicated thing. It costs a little bit of money, takes some time, but it doesn't take years. It takes maybe, 30, 45 days. And you have knowledge and you have skill. For example, how to underwrite deals. That's a very important skill. And that's something that can be acquired very quickly. So education is part one. Part two is building a team. And this is something, the two most important team members you need on your team is a property manager, number one, and a lender, number two. You need both of those to buy apartment buildings. But what they also do is they lend credibility to you. You might also want to have an advisor. So if you have a mentor or a coach, either paid or unpaid, well, that's part of your team. If you have an SEC attorney, that's part of your team. Do you have an insurance broker? That's part of your team. So what happens as you build out your team, you talk about your team and you don't really talk about yourself. So when you talk to a broker, you don't say, hey, my name is Michael. I'm a newbie real estate investor. Can you send me some deals? You're going to say, hey, I'm Michael. I'm getting into the Atlanta market. I'm working with property management company XYZ, who manages 4,000 units in Atlanta, and all of a sudden you're talking about the strength of your team and you're not really spending any time talking about yourself. And so you're deflecting your own lack of experience by literally leveraging your team. And this is the power of syndications. In the single family world, it's really a lone wolf sport. It's like you, right? In multifamily syndications, if it's just you're kind of a weirdo, man. I mean, you're weird.
Yeah.
Like joint ventures are so, not only they're common. It's weird if you go alone. So it's always a team sport with multifamily syndications. And so if you go out educated, using the right language with some amount of confidence and some amount of team around you, brokers are going to take you seriously, investors are going to take you seriously, and doors will start to open. So it's something that one can overcome in no more than 90 days, 30, 60, 90 days. You'll know what you're talking about, and you'll have a team built, and you can now go out with confidence.
This is all really good. Let's basically go into a definition of what syndication is and talk a little bit about some of the different parts. You said earlier that, there's the general partner side where they are the syndicators, they're the operators, and they run the show. And you spoke about how there's a lot of different pieces of that. And then you spoke about how there's also the limited partner side. So could you give us a few of those roles and how somebody could get started?
Yeah, so syndication in general is the pooling of money and resources to acquire real estate. Okay, I think one of the first syndications was the Empire State Building was actually acquired through a syndication, and essentially it's like it epitomizes what entrepreneurs do. Like I said earlier, making something happen out of thin air by bringing money together from different people, by bringing in operations and all kinds of people. So the roles in a syndication, there's two main buckets you just identified, which is the limited partners or passive investors. These are people, and all they really do is invest. And that's all they really want to do, most of them. They just want to invest and get a return, not pay taxes, quit their jobs. Okay, so and because they're limited partners, right? Their exposure is limited to the money they invested. In other words, they don't really have any operational say in the deal, which is perfect by them, and therefore their liability in lawsuits, for example, and loss greater than their investment, therefore is limited to their investment. Then there's the general partners, and those are the people who make everything happen. Now, within a general partnership, there's at least 4 roles, sometimes more, which means that syndications lend themselves to joint ventures so easily. Now, if you are a generalist and you can do more than one thing, that's great. You can do one more things, but there's really multiple tasks that a general partners have to perform. One is deal finding. Deal finding involves talking with brokers, analyzing deals, making offers, possibly doing due diligence. So everything about sourcing a deal and bringing it into closing, it's deal finding, right? Then the other one is capital raising. So these are people who are dealing with investors, educating them, getting them comfortable, and actually getting them to the closing table. Number 3 is the manager or the operator. These are people who manage the whole thing after closing. Someone's got to do that. And the 4th person is the marketing person. that marketing person is really there a little bit later in the stage of a syndication as the business grows to expand the scale of the operation, typically to attract more capital to itself. And that involves online marketing techniques such as blog posts, YouTube, social media. And so this is why syndications lend themselves so well to joint ventures. We have people who have joint ventured with one partner, two partners, even three partners. And while they're all moving in tandem towards the same goal, they have different things that they focus on and different strengths. And so again, one of the reasons I love it is that, for example, if you love numbers and analysis, well, there's a role for you, because my gosh, analyzing deals, doing due diligence, and ongoing reporting really requires numbers. So there's a role for someone who's detail-oriented, numbers-oriented, maybe doesn't love people that much, likes to sit in a dark room. Okay, great. But if you're a relationship kind of person, and you, at the thought of a spreadsheet makes you break out in a cold sweat, but hey, you have the gift of gab and you love golf, holy moly, well, why don't you raise some money? Because that's what you love to do. You're a relationship person. So those kind of people oftentimes form great joint ventures because of their different strengths and what they're good at and what they love to do.
Awesome. So when I listen to your show, the Apartment Building Investing Podcast, you say, I believe at the beginning of almost every episode, with an emphasis on raising capital from others. So you really teach how to get in front of the passive investor, how to help the passive investor, how to call the capital from the passive investor. So if we could spend the next few minutes of the episode just diving into the process of building an online platform that attracts the right investors, and as opposed to just investors, and turns them into raving fans so that you can raise money from millions of dollars from passive investors. Can you give us a little bit more about that process and what we need to be thinking about?
Yeah, I mean, step one, you can raise $200, $500, even $1 million by word of mouth and one-on-one meetings, and many people have. And that's typically a great way to get started. So you don't need an online thought leadership platform to start raising money. The benefit of doing it one-on-one is that you really get to know your investor. You get to know who they are, what do they care about, what do they want, what are they afraid of, and what are their questions, what are their objections. So every time you have a new conversation, you're more proactive about addressing their questions and objections, because you don't want to get objections. You don't want to have 10 objections. In your presentation, you want to address most of those, and over time they start going away. And having but people then who have raised, say, $500,000, they may have met with 100 different people. They're like, man, this was a lot of work. I'm really happy I did it. I have track record now. It's great, but I want to add a zero after everything I've done. I don't want to raise $500,000. I want to raise $5 million. But I just met with 100 people. How in the world am I going to meet with 1,000 people? It's a logistical problem that can't be solved unless you move the conversation online. And in order to do so, you do have to know what we call is who's your ideal avatar, right? Who's your ideal investor? And that requires, and these conversations you have with people beforehand helps clarify that. And being really clear about who you are and what your story is and who you want to attract, who is your ideal avatar, your ideal investor, allows you to connect with that person more closely. So, for example, if I'm a doctor, okay, and I invested a little passively, and I said, man, gosh, I'm going to tell my friends about this, and they start raising capital and start creating a syndication company. Well, their story is a medical one. So they might want to focus on attracting money from other medical doctors, for example. If I'm a professional athlete, for example, well, my story is completely different. And my ideal avatar is going to be other professional athletes, because that's my story. So what's your story, and how can you connect with them? And what's going to happen is you're going to repel certain people and you're going to attract others. And that's on purpose, and that's actually good, because those people then will become raving fans of you, and will tell their other people. So the first one is becoming clear about your brand. And that's all part of that. Who's your avatar and things of that nature. So that's kind of step one. And once you have some clarity around that, then it's really a matter of building out your platform. And the core component of the platform is being able to capture leads. So when someone goes to your website, capturing their email address in some way. And it's what I see a lot of guys and gals doing is, they get on someone's podcast, and which is great. It's an awesome. You get on your show or my show. It's awesome. It's a big achievement, and they, you ask them, well, how can people find you? And they give them the XYZ property management company.com. And first of all, no one's going to remember that URL, number one. Number two, there's no reason to go there because I just listened to you on the podcast. And worst, you're not going to have that guest back for at least, 18 months, maybe ever. Okay, because there's so many cool ass guests out there. So I just lost my chance to capture people who want to follow up. And so the solution to that is when you go to your website to have something of value there, right? So, I might have a lead magnet if I am, a former financial advisor and I'm talking to retirees or people about to retire. My lead magnet might be how to never run out of money in your retirement. Right? Because that's what retirees are scared of is, oh my gosh, I'm living longer than ever before. I'm going to run out of money. How do I prevent that? So if someone says, hey, how can people connect with you at? Yeah, you so-and-so, and I have this great download for how to never run out of money in retirement. And the people on your podcast who then are retirees are going to go, wait a minute, I want that. And they're going to go to that person's website and give them their email address to download that special report. And now what happens is a series of automations that educate them about syndications on the one hand and get them to schedule a call with you, because you can't just raise money from perfect strangers. It violates SEC regulations. Therefore, I have to have a pre-existing substantive relationships. And there's multiple requirements around that, but a big one is actually having a phone conversation. So when you download something, there's going to be a series of email automations that are running that educate the person, but also gets them to schedule a call with you. And once they schedule a call with you, you get to know them, ask them questions, answer their questions. You can now show them future opportunities, and I call those investors deal-ready investors. And you can automate large parts of that. In fact, we're teaching people how to do that right now through a platform builder workshop, and it's really super cool, where people just the syndicator gets up in the morning and they have 3 calls scheduled on their calendar. And they're like, who are these people? Why are they doing on my calendar? And they've gone through the automations and they said, hey, I want to talk to Frank. And all of a sudden they're talking to Frank, and then they end up investing with them. So that's the core platform. And you really have to commit at that point to content production. Putting out content on a regular basis is super important to build trust and continue adding value to people. And if you do those things, it is you can raise millions of dollars seemingly effortlessly in days. And it's super magical. And it's because of the platform. It's because of the podcast, the YouTube video, the blog posts, where you're providing value and people feel like they get to know you and trust you, and therefore they are willing to invest with you.
Okay, you gave us a lot, and I want to sum of it up for the listener. One of the major takeaways that I got is you mentioned that you need to have a platform. You mentioned that you need to have a lead magnet. But what I felt was really interesting that many people are missing is they're starting podcasts, they're starting platforms, they're creating some type of lead magnet, but they never did anything that you said in part 1. They completely missed that. And so you have 2 parts. The main first part is you need to really understand your ideal avatar. You have to clarify your brand. You have to know that you're going to repel the wrong people on purpose and attract the right people on purpose. And you gave examples like, there's a lot of people that say, my avatar is anyone with between $500,000 a year and $7 million a year. And you and I are like, what are you talking about? That's not an avatar. That's just how much money someone makes. You, Michael, you mentioned they might be in medical. They might be an athlete, an engineer. They might be retirees. And once you understand who they are, where they live, how many kids they have, what they're stressed about, what they're going through, the type of language that they're used to speaking, you can start playing to them and attracting them into your world. So you first have to understand who you're even going for, who you're going to, I guess, raise money with before you ever spend an ounce of time trying to build a platform, get launched on other people's podcasts, put out a lead magnet, because what is your lead magnet going to be if it's not specific to your avatar? I thought that was really interesting. Let me ask you this. So number 1 is all the pre-work. Understanding, it's doing your recon. Like you're in the military, you got to see all those other bases. You got to understand where you're going to be going, and you got to get your stuff together. And then you can start making your plan, creating your platform, creating a lead magnet, giving something of value. That was the quote that I wrote down, giving something of value, something that they care about. And rather than just sending them to, at the end of the podcast, for instance, you said, at the end of the podcast, a lot of people are like, here's my Twitter handle, here's my Instagram handle, here's my Facebook handle, this is my website, this is my other website. If they want to email me, they could email me here. And if they want to come to my meetup, they could come here. And they just keep going. And what you said was really valuable if the listener will take heed. What you really need to do is give them one call to action. Here's something of value. And then you said, I have this free download for blank. You fill in your avatar. I've got this free download for engineers who are looking to exit the rat race. I've got this free download for other athletes that are trying to place their XYZ, or this free download for medical professionals who are looking to do XYZ. And you can go here to this place. And then you talked about all the email automations that are essential that are coming to them after. This is, by the way, as I understand it, or this is at least how we do it, you get this stuff, you build that platform before you launch. Like, you have your email automations ready to go before you ever get that first person into the email automation. Would you agree?
That's exactly right.
And so you've got the emails already ready to go. It gets them to schedule a call with you. It gets them to be what you called deal ready. And when you define deal ready, that means that they've basically been vetted. They've come through your funnel. They've had a conversation with you, and you understand kind of their financial background. Is that what deal ready means?
That's exactly right. Yeah, they've jumped through various hoops that we feel builds up that substantive relationship to satisfy the SEC requirements, but also to get to know them and make sure that there's a fit, because sometimes there is no fit, right? I mean, if they're investing their last dime, I don't know. I don't know if I should take your last dime to invest in this. I don't know if I feel right. So getting to know that investor, that's the point.
And then you said you had to commit to content production. I'm going to ask you why here in a second. But you also said if you do all of these things above, all the things that we've just talked about, you're going to be able to raise millions of dollars in a short amount of time. So let's talk about content production and why you have to, quote, be committed to it.
So once you have your platform built, your main problem becomes one of how do I generate more leads? How do I get more people to schedule calls with me? And how do I build trust with people who actually download my lead magnet? And the content addresses both of those. So every piece of content you put out on any channel whatsoever, let it be a podcast, YouTube, it doesn't really matter. The call to action is always download my freebie, download my freebie, download my freebie. So you're sending everybody back to what I call home base. Therefore, your content can be used to attract and generate more people to you and schedule more calls. At the same time, what you're doing also is you're educating people, you're providing value. Therefore, you're also building trust with people. And therefore, this is why you have to do that. People say, oh, is once a month enough? No, it's not. Once a week is a good cadence. And so new platform builders sometimes struggle with the content creation. And my advice always is don't do everything at once. Just pick one channel and work on that. And what I love about the online marketing thing, because you can automate so many different things, is you can layer one thing on top of another. So you build your platform, it's a one and done thing. A lot of work, costs some money, you got it, automation's already, okay, done with that. Next, well, what do I want to do next? I like video. So why don't I do YouTube? Okay, I'll do YouTube. So, okay, you got to set it up, and it's a little technical maybe, and you got to get some thumbnails, some art. You got to start recording and uploading, and then you get into a groove. After about 4 or 6 weeks, you're like, okay, I got it. Maybe you do 2 or 3 or 4 at a time, and you upload them, and you kind of get it going, and you start automating and maybe delegating. It's like, okay, it's pretty cool. You're good. You got the new habit. You're like, okay, kind of done, kind of an autopilot, right? It's like all these plates that are spinning. You get your platform spinning, plate spinning, and then you start your YouTube channel. Okay, that's spinning. You're like, okay, what else to do right now? Let me do a podcast. That's kind of cool. Okay, podcast. Oh my gosh. So now I gotta figure out who am I gonna invite? I gotta set the thing up, and I gotta create a schedule, and you gotta get going. And it's a lot of work up front, and it's a new thing, and you gotta make time for it. And so it's a little effort to get that plate spinning up there. And then all of a sudden it's spinning. And all of a sudden before you look up, you have a half dozen plates spinning, and all they're doing automatically is adding value, building trust, and generating leads. And you build up this massive momentum where you sometimes have 5, 10, 15 new calls with people who come through these channels. You're like, my gosh, where are these people coming from? And it's because of all this power. And so my advice to people is, don't think that you have to do a YouTube video, podcast, blog, and email newsletter all at once. That is like, who wants to do that? Pick one and just go with that. Now, the beauty of the content production is that you always want to repurpose your content. So for example, if you do commit to, say, YouTube, well, it's relatively easy to create a blog post and email from that, or even an audio file, a podcast. So repurposing content is not only, it's very advisable and relatively easy to do. Therefore, you produce one piece of content, how to invest with your IRA, and that goes out over YouTube. You have a podcast episode, a blog post, and email, and of course, social media thumbnails that point to all those assets. So you take one piece of content and you repurpose it. And after you get to like 6 months worth of stuff, it's not like you necessarily have to produce new content for the rest of your life. No, you can actually repurpose it either by literally just updating the date and republishing it, or by keeping the same content, just updating the thumbnail, or by possibly reshooting it. Oftentimes, the biggest struggle is, well, what am I going to talk about and what am I going to say? So the topic and the script is sometimes the biggest struggle. Once I know a topic and a script, I can talk into a video. How do you invest your IRA? Oh, 3 ways, blah, 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 and I can talk about that. So it's really a matter of committing to it. And if you look at all the big syndicators, and the big syndicators are all thought leaders. Like you have platforms, right? You can raise millions of dollars. If you look at the big ones, that's how they've done it. And if you want to raise millions, that's how you're going to have to do it. There is no other way to do it. You can't meet with 1,000 people. I don't care, Adam, how big your meetup is, okay? You need something even bigger than the biggest meetup in the world to reach that kind of scale. And the way to do it is by committing to content. And sometimes people are missing the direct link between content production and raising money. But that link, while maybe not completely direct as a one-on-one meeting, is very direct indeed. So people have to commit to producing content if they want to scale their capital raising business.
Love, love, love that. Thank you. So commit to content production. You can raise millions of dollars. You don't want to do it all at once. You can layer it on top of each other. I get a lot of people asking me, you really want me to do all of these things? And my focus is just focus on one, get it going. And then when it's automated, like you said, after 6 weeks or whenever you feel like it's ready to go and you don't have to put so much attention on it, now you can get that second layer. And repurposing content is a huge takeaway as well. And even for me, and I've been putting content out for years now, and I'm thinking to myself, man, there are a lot of things that I did a long time ago, and I don't have to reinvent the wheel. I can just go and take those, either re-record them or repost them with a new date. All really, really good information. And I had a question that a lot of people come and ask me, and it goes back to your original avatar, because again, if you have a thought leadership platform, if you're creating content, it all needs to add value to your specific avatar. But I have people asking me, well, can I have more than one avatar? Can I focus on, rich, single, like women whose husbands have passed away within Georgia in this one neighborhood, and there's a lot of them there, they say. But I also want to focus on yoga instructors in Florida. Can I have both of those avatars when I'm creating content? So what's your answer?
Yes, you can, but it comes after, right? It comes after. So you do one, you focus on one, and then once you have that plate spinning, you can then go after another avatar. So for example, my professional athlete friend who's a former NFL player, well, he's going to go after all professional athletes, okay? But eventually he's going to start speaking specifically to NFL players versus basketball versus hockey, right? He's going to start selecting the avatar more precisely, but instead of going, hey, why don't you only speak to, or maybe good advice would have been, hey, only speak to your NFL buddies, okay? That's a pretty big thing, and then expand out to others. So the answer is yes, but just do one first. I get this question all the time. Just do the best one. And same with medical doctors. Well, what kind of medical doctor, right? Is it, and just pick one first and speak to that person. Get really good at that. And then you can say, hey, if you're this kind of medical doctor, then download this. If you are nurse, I'll make it up.
Yeah.
Then download this report. Okay. But start with one. Just do one. And if you do nothing else, that'll propel your business to the next level.
And I have another question. It's because I specifically, I try to get, clients to start with one lead magnet and only one. But sometimes I wonder if I'm, what's the word for it? What's the word when you say one thing and do another? What's
I
that?
do my kids all the time. It just doesn't work. Unfortunately, I wish it would.
I don't remember
to do
what
I say, not what I do.
Well, so for me, I have all sorts of lead magnets because I feel like if I get on somebody's show and they want to talk about podcasting, I have to have just like one lead magnet that deals with just today's topic. And if I have one on meetups, I'll do a meetup one. If I got one on raising money, or I have one on passive investors. So if somebody asks me, how do I protect a passive investor? Well, I prepared a lead magnet just only for passive investors. And so in my opinion, I have a lot of lead magnets and perhaps too many. And that's one of the reasons why I'm asking you.
No, not at all.
But I felt like it helped me because if somebody asks me one question, I just kind of like, I funnel them to only that one place. At the end of the podcast, I don't tell them my website. I don't tell them all these other lead magnets that I might have. I only talk about whatever we were talking about today. But I guess for the newbie, for somebody who's getting into this, I don't want them to be overwhelmed. I don't want them to think that they have to have multiple lead magnets. I think one should be okay. So what are your thoughts on that?
Yeah, absolutely. Just like I said, just pick one. Just focus on one. And over time, you will have multiple lead magnets, right? Master marketer like Amy Porterfield has literally one lead magnet per podcast episode. She's ninja about it, and it's directly related to the episode. That's really powerful because she wants to convert her listeners every single time to her email list. And so, yes, you can have multiple lead magnets, but that's advanced. And talking about your ideal avatar, we're talking about the new platform builder. So you're already a senior platform builder. So your and my challenges are totally different than someone who's never built a thought like leadership platform before.
Yeah. Okay. Good. So they always ask me, so do you only have one lead magnet? And I'm like, don't ask me that question. I have more, but you got to start with one.
Yeah.
So you would agree on that?
Yep, absolutely.
Okay, perfect. Here's a good question. The listener wants to raise more money. The listener loved all of your advice. They know that it's right to focus on one. And now they're wondering, how do I even get this going? Do I use MailChimp, ActiveCampaign? Will I use Zapier? Will I use simple texting? Will I use slide dial, slide texting? What are the beginning, like the basics on how to launch a lead magnet? Do they need ClickFunnels? What do they need?
Yeah, so it's very simple. There are a variety of email systems. You need an email system, and there's MailChimp and Constant Contact and Aweber, all great systems. You just need one, ActiveCampaign. Okay, it's very simple. You guys use ActiveCampaign?
Yeah.
Okay, so we use ActiveCampaign, and we've looked at all of them. What I like about ActiveCampaign, while it's not free, it's super affordable. It's like it's $9 a month for 500 contacts. And so there are some free ones out there, but those free ones don't allow you to scale. And I have switched email systems in my career 3 times, and every time I do it, it's more and more painful until I discovered ActiveCampaign. So ActiveCampaign allows you to do the basic, simple things very easily and affordably, but allows you to scale. And you are not going to appreciate some of the features that ActiveCampaign has because you're not going to need them right now for probably the first 6, maybe 12 months. But after that, you're going to hit a point where you need those features that then just by investing a little more money in ActiveCampaign are magically enabled. So I want to save you a lot of having to look at different systems and go right with ActiveCampaign. So that's, if you're using MailChimp, stop that, import your stuff, move over to ActiveCampaign right away. So ActiveCampaign is, and then you are going to use Zapier for some of the automations on the back end. But again, some of those things, that the Zapier stuff is a little technical, so you're going to need some technical help. The ActiveCampaign stuff is actually super non-technical. It's very graphical, very drag and drop. The tutorials are great. Again, Zapier is one of those things you probably don't need. You're going to use a lot of Zoom. To create your lead magnet, you're going to create it in Google Docs. The biggest thing is creating the text. And then you use something called Canva, Canva.com, which is a free tool for all of your graphics and photos. So think of your YouTube thumbnail, your blog post thumbnail. You upload a picture of you going like this, and you have a text, and they have these fantastic templates, ebook covers, lead magnet layouts, Facebook headers, Facebook images. And it's just unbelievable. You sit there hours just looking through all the cool templates going, oh, I like that one. I like that one. So you can basically make your stuff look stunning. It looks like you hired some kind of production company. So ActiveCampaign, Canva, and then your website, obviously. We use WordPress, very common. It's very easy to add your ActiveCampaign forms into any website, whether using Wix or anything at all. And those are the major components. And the message I have is that, these things are, while they are technical, and the problem with this thing is that people say, oh, I don't like technology. I'm technology averse. Technology and I don't mix. Okay, well, that may be true. The thing is that technology is more and more usable than even it was 5 years ago. And I think the biggest, what I observe is if you just become open to watching a video tutorial on something and then doing that same exact thing, people kind of go, oh, it's not so bad. I can do that. And all of a sudden they're in ActiveCampaign. But people oftentimes resist doing things like ActiveCampaign, MailChimp because it's new. And my challenge with people is, look, if you balk at everything that's new, you're not going to be very successful in this business. So you have to have an open mind. Does that mean that you can solve every single technical problem? No, it does not. But it'll solve like 90% of your technical problems. And the second thing is, never before can we hire qualified technical help so affordably. Okay, so I can hire someone in the Philippines or Latin America or even US for very, very little money. And these are highly qualified people, and they can do it all for you. Now, that still means that you have to know how to do it. You can't hire a guy or a gal and say, hey, do all this stuff for me, and they pull the wool over your eyes. Okay, you have to know. You got to be able to call BS on these guys. So I reject the idea that I'm just going to outsource all of my content production and technical stuff. No, don't do that. Yeah, that makes you a hands-off person, and it's not going to go well for you. So at least educate. Well, at least watch a tutorial so you know what's going on, and then you can still hire someone.
Very good. Very good. So ActiveCampaign, Zoom, what do you use Zoom for? Just for recording content, or is there other things that you would use Zoom for?
For everything. Okay. You can use it to recording content. You can use it to recording of you talking, screen share, or just screen share. We use it for inner team. We use it for when we schedule calls with our investors, much better than just a phone. We use it for the actual investor webinar. So Zoom is free / super affordable.
Got it. And then Canva.com to make things really pretty. They really make it look like you spent a lot of money on your design. And Canva, I don't know the cost. We do have it. I'm assuming it's like $10 a month or something.
Well, it's free. I mean, we pay for it now.
It's completely free.
We use advanced features, but I mean, you can do a lot of stuff for the free account.
Okay. And then Zapier, WordPress, and then you said Zapier kind of integrates things. So if somebody downloads your lead magnet on WordPress, then Zapier goes and tells ActiveCampaign to basically upload this in and start sending them the drip emails, which I believe you said were once a week, not once a month, right?
Yeah. Actually, you don't need Zapier for any of this stuff.
Okay.
Zapier does something very specific, which is kind of advanced. It makes Calendly talk to ActiveCampaign. So if someone schedules a call using Calendly, we use Calendly a lot. Super big tip. I probably gained 10% of productivity just by using Calendly 2.5 years ago. And so we use Zapier to make Calendly communicate with ActiveCampaign. But when someone downloads something from your website, it goes right into ActiveCampaign. You can do 98% of all the automations just with ActiveCampaign.
Got it. Awesome. And what do you want the listener to download today? What are you going to give away?
Well, so we do have 3 ideal avatars depending on who the listener and watcher is. So if you are an active investor, you want to become a syndicator, then you might be interested in my secret to raising capital to buy your first deal. It's my ebook, and that's at themichaelblank.com/ebook. If you're a passive investor and you're interested in investing, then you might want to go to themichaelblank.com/report. And I do break down stock market versus real estate investing in that. So that's /report. And if you do want to build a platform, you can have a free training on this at themichaelblank.com/platform. So those are my 3 distinct avatars that we're talking to.
Awesome. Thank you so much, Michael. Any other takeaways you want to give to the listener before we go?
No, I just, I appreciate the opportunity to come on, Adam. It's kudos to you for starting yet a second podcast. That's a big commitment in addition to all the stuff you're doing. So yeah, thanks for having me, and thanks for your continued education to elevate people's awareness around syndications.
And to the listener, if there's time, if you're getting this before the end of July, you got to come to Dealmaker Live, and I've got a link to that in the show notes. So I'll see you there live virtually. I bet you're going to have a ton of people there. I'm really excited, Michael.
We're going to have some ton of people. We're also going to record it and then sell the recordings afterwards. And that will make the price even more affordable so we can reach more people. So if they're not going to be there live, that's fine. We'll have some recordings for everybody.
Awesome. All right, I'm going to let you go, but until next time, think outside the box. As a reminder, any investment opportunities mentioned on this show are for accredited investors only. And if you're interested in working with me and my team, then go to realbluespruce.com and click Get on the List. It's that simple. Just click Get on the List to start passively investing. This has been an episode of the Apartment Investing Show with me, Adam Adams. All rights are reserved. And if you haven't done so already, then make sure that you absolutely smash that subscribe button, and I'll see you on the next episode.